Hey everyone, and welcome. Today, we're jumping into a really high-stakes question based on our source material. When a financial crisis really hits, which one is the true safe haven, gold or silver? The answer is probably not what you think, so let's get right into it.
All right, our source material doesn't waste any time. It kicks off with a series of really stark, rapid-fire warnings. And the first one is this: the next financial crisis will not look like the last one. The main idea here is that you can't just dust off the playbook from 2008. Whatever is coming next is going to be a completely different animal.
And get this, the banks aren't going to give you a heads up. The argument is that the whole system is just so interconnected now that, unlike last time, there won't be some slow rollout of bad news.
And this is the real kicker. The markets are not going to give you time to react. A modern crisis moves so fast that by the time you realize what's happening, it might already be too late to do anything about it. And this is where the two main characters of our story come in. In this kind of scenario, one of these metals is set up to be the quiet survivor. But the other one, it's framed as a trap that could catch millions of unsuspecting investors completely off guard.
So this is the big mystery we're really digging into today. We're always told gold and silver are both precious metals, right? Both are supposed to be a hedge against chaos. So if that's true, why is it that when a real crisis hits, one tends to stand strong, while the other often takes a massive nosedive, at least at first?
Well, to understand that, we have to look way past the shiny surface and get to the core identity of each metal. This isn't just about what they're made of. It's about a fundamental clash between two powerful forces: fear and growth.
Let's start with gold. The source makes a really interesting point here. Gold isn't really an investment in the way a stock is. You should think of it as money that exists completely outside the control of any government. It's what central banks pack into their vaults. Its one and only job is to store wealth when our trust in the entire financial system starts to crumble.
So what makes gold's price go up? It's simple: bad news. The very things that cause total panic everywhere else, banks looking shaky, currencies getting weaker, government debt just exploding, those are the things that give gold its strength. The source basically defines gold as fear insurance, and that's a perfect way to think about it.
Okay, now let's flip over to silver. This is where its identity gets completely turned on its head. While yes, silver has a history as money, its main role today is industrial. It's a critical piece in manufacturing pretty much everything, from solar panels and all our electronics to medical gear and electric cars.
And this table just lays out the huge difference perfectly. Gold is fear insurance. Its value depends on a collapse of trust. Silver, on the other hand, is an industrial component. It depends on economic growth and production. They are literally powered by opposite economic forces. One thrives in chaos, the other needs prosperity.
So now that we know they have these totally opposing identities, what actually happens when a crisis finally hits? Let's walk through the chain reaction that the source calls the Great Divide.
So here's how the dominoes fall for silver. First, the crisis begins, stocks are tanking and credit markets just freeze solid. Then, because the whole economy is grinding to a halt, factories slow down or even shut down completely. This absolutely crushes the industrial demand for silver. And finally, investors see what's happening, they panic, and they start selling, which causes the price to just collapse. It gets hit first because its demand is tied to a healthy, growing economy.
But there's something else that makes this fall happen even faster, what the source calls the paper metal trap. Here's the dirty secret. The silver market is just flooded with paper contracts. Futures, derivatives, you name it. This means there are way more claims to silver on paper than there is actual physical metal in a vault somewhere. So, when the panic hits, big institutions can just dump these paper assets, and that floods the market, crushing the price with brutal speed.
Gold, on the other hand, does the exact opposite. It isn't tied to industrial demand, so it couldn't care less if factories are shutting down. In fact, the very fear and panic that's destroying silver is the rocket fuel that sends investors fleeing from other assets and running for the safety of gold, which drives its price up.
So this isn't just a theory, right? It's about what people actually do. Let's follow what the source calls the smart money. And by that, I mean let's look at what the major players are doing, not just what they're saying. And this, right here, is the key piece of evidence. During times of massive global uncertainty, who's buying what? The source points out that central banks, governments, and, billionaires, they're all consistently buying and holding physical gold. And here's the most telling part. They do not stockpile silver for these end-of-the-world insurance purposes. And that kind of behavior leads to a really clear, memorable verdict from our source material. The argument is this. Silver is a fantastic asset for speculating. You bet on it when you think the economy is going to boom. Gold, however, serves a totally different purpose: survival. It's for when the whole system is at risk.
And we'll end on this final, pretty provocative quote that just crystallizes the entire argument perfectly. Silver can make you rich in a boom. Gold keeps you alive in a collapse. It frames the choice not just as an investment decision, but as a strategic one about what kind of future you're really preparing for.